What's going on, guys? Welcome back to the channel. In this video I'm going to be showing you the intraday range strategy with a new entry model, the IFVG entry model, that is the inversion fair value gap entry model. We'll still be using the same criteria to find trades as the intraday range strategy. If you haven't watched the intra-range CRT strategy, you can check the video after watching this one, because this one is a killer video. So let's get into the video. We have the strategy checklist. So we first mark the 9 p.m. H4 candles high and low. Then we wait for a purge between 1 a.m. and 5 a.m. New York time. That is the London Q zone by ICT. And our entry is on a 5-minute IFVG. That is a singular IFVG. I'll explain more on singular IFVGs when we're in the charts. And when the candle which caused the IFVG is too big to enter, we enter on its body's 50%. The body is 50%. That's where we enter, and we target 1 to 2 on risk to reward, and our stop loss is at the swing high. And lastly, we repeat the process and collect the bag. So this is actually everything you need to know about this strategy. We'll move to chart examples after what to avoid in this strategy. What to avoid? Number 1, executing outside the entry time range. That is 1 a.m. to 5 a.m. New York time. That is the London session. You should always execute inside the London session or the London Q zone range. If you execute outside that range using the H4 candles high and low, you might take a lot of losses, since we are trying to catch the Judas swing with this strategy. Number 2, executing on non-singular FVGs. When we have multiple FVGs going in the same direction, price will usually tend to invert a singular one FVG and then respect the following one, meaning that it wouldn't help using non-singular FVGs, as they will be used for continuation for the market to continue moving higher or lower. Number 3, taking more than 2 losses in the same trading day. As I had mentioned in the other video, you should not take more than 2 losses in the same trading day. You can take 1 winner and 1 loss, or you can take 3 winning trades in the same day. But with this strategy, most of the times you can only take 2 trades. Usually you would lose 1 and win 1 from what I've tested. Number 4, CRT formations inside of the H4 candles range. We have to wait for a purge on either the high or the low of the H4 CRT candle. We have to wait for the 9 p.m. candles range to be purged for us to start looking for trading opportunities. Anything before that will be not following the plan. It's like trading within the Asian range. You just get chopped up and get stopped out and lose trades. Entering at high impact news times. I highly emphasize that you should not take trades just before high impact news events, because you will be stopped out and they will take more than what you have decided to risk on the trade. For example, if your stop loss is 20 pips, high news events might take you to 30 pips or to 40 pips, meaning you would have lost more than you intended to risk, and that can be detrimental to your trading success. Now let's move to the examples. Example number 1, the candle close entry. We have the range here, the 2100 hours H4 high and the 2100 hours H4 low. And what happened is price decided to push up and take the 9 p.m. H4 candles high and continue pushing up until we got that inversion, and we left this fair value gap here between the range. Remember, we'll always look for trades between 1 a.m. and 5 a.m. and price inverted with a small candle, and we enter on the candle close of the candle which inverted the fair value gap, and we target 1 to 2 RR on the risk to reward, and our TP is hit. It's actually this simple. You just wait for a purge of the high and trade this reversal. Basically, this is the Judas swing, and then price reverses as we go in the correct direction of the daily candle. So some may be asking why I didn't use this fair value gap here, which was inverted right there. The reason why is because it doesn't have a singular FVG, because price was pushing up with these fair value gaps here, and this candle right here created a huge range, of which these two candles which formed this small swing point did not break this candle's low, meaning we're still in this trend. All these candles, we have 1, 2, 3 fair value gaps, so it's not a singular fair value gap. But if you look at this fair value gap, we have this swing low. It's very clear, there's no inside bar or anything. We have a clean low. We also have this clean low yet again, and then what happens? Price pushes up and forms this fair value gap, and price then closes below it, and we enter right there and target 1 to 2. So at times you can just mark your swing low to avoid losses. This huge down candle formed a swing high here and a swing low at the same time. That's valid, rather than these two candles which were inside bars, which just formed a swing high, which means it's not valid for entry. Now let's move to the second example. Example 2, the 50% entry. You can basically see that we have the 9 p.m. candles high and the 9 p.m. candles low. Then price decided to manipulate the highs right here. We have a singular fair value gap. We have a clear swing point there. Price closes with a huge candle here. This candle's range is huge, and if you sell here, the stop loss would be too wide. So we basically mark these candles open and its candles close. We enter off 50% and target 1 to 2, and our target is hit. And we move to the second example here, where price then swept this previous setups high and inverted this fair value gap, which was a singular fair value gap. As you can see, there's no other fair value gap in this uptrend. There's only one which got inverted, and it formed a huge range on the candle which inverted it. Then we'll have to mark the open and the close and the 50%. That's where we enter on the pullback. You see price pulled back there, we enter, target 1 to 2, and our target is hit. It's as simple as that. So now we are moving to the third example, which is a continuation candle close entry. So this is a little bit different, and this is a little bit advanced, and is for the people who actually stick with this strategy. since it's not that easy to spot for the majority of people. So if you end up utilizing this strategy a lot, you can DM me on Telegram. I have a free Telegram where I share my trading ideas and some psychology and updates on what to come. You can also vote and tell me the videos you want me to release. I can tell I have a lot of videos recorded. You just tell me which one you want me to release on polls I send out almost every week in the free Telegram. So please do check out the free Telegram for that. So you can clearly see that price here swept the low of the H4 candles range, right? But it was before 1 a.m. which starts here 1 a.m. on this huge candle. So basically we'll have to wait at times for price to sweep this low, form another IFVG for us to enter longs in target 1 to 2. But we go in differently. After this low has been formed, we wait for a fair value gap to be formed, right? And then gets inverted, a singular fair value gap. You can see we also have this swing high right here. Then we enter on the candle which inverts the fair value gap, and we target 1 to 2, and our target is hit. So these are rare entry types, and they're actually higher probability ones. You can use them in such a manner that you can say you entered a long here, 1 to 2 hit, then you get another one here, inverted by 1 to 2, and your TP would be hit if there was a fair value gap. In this example, there is no fair value gap, to not confuse you. I'm just making an example right there. So this is actually a simple strategy. Let's just go over the checklist and what to avoid. Then we'll move to a backtesting session of September 2024 using this strategy. So basically, as we have said before, you mark the 9 p.m. H4 candles high and low, or you can use the indicator which I'm using. I'll show you the indicator later at the end of the video. So please stay to the end of the video if you want to know the indicator. I see a lot of people asking me which indicator I was using. So if you want to know the indicator, you see it at the clip. If you want to know which indicator I am using, you see it at the end of the video. I'll insert a clip of the indicator somewhere in the video. Maybe it's not the end, somewhere in the video. So please watch the whole video so you'll find the indicator I'll be using and its settings. So you wait for a page between 1 a.m. and 5 a.m., the London kill zone. Then you enter on a 5-minute IFVG, a singular IFVG. Then when the candle which caused the IFVG is too big to enter, we enter on its bodies 50%. Then you target 1 to 2, you SL at the swing high or swing low, and then you repeat the process. What to avoid? The first one is executing outside the entry time range, that is 1 a.m. to 5 a.m. New York time. Always remember to utilize New York time, because if you don't, you won't be following this strategy. You'll be trading a different time range. Number 2, executing on singular FVGs. As I said before, you'll just be hit by a continuation of the market and you won't catch the reversal play. Number 3, taking more than 2 losses in the same trading day. You just take 2 L's and call it a day. You would have lost 2%, and you can recover them with just 1 winning trade. And this strategy has a high win rate. IFVG formations inside the H4 candles range. By this, I don't mean that you can trade IFVGs which form inside the H4 candles range. I mean IFVGs formed before the purge of liquidity of the H4 candles range. If we form an IFVG before clearing the H4 candles high, then it is not valid, or clearing the H4 candles low, it will not be valid. We'll have to wait for price to clear either the high or the low for us to look for inversion fair value gaps. So a simple way to do this is by setting alerts at the high and low, and then you just work with that. Entering at high impact news times. Ladies and gentlemen, you get fried if you enter at high impact news times. There are experts who trade high impact news, but if you're a prop firm trader or if you're trading personal capital using this strategy, I advise you not to trade or enter at high impact news times. Though with this strategy, since we are trading 1 a.m. to 5 a.m., you usually do not get opportunities to trade high impact news, since trades are usually executed and take profits are hit within 1 a.m. and 5 a.m.'s trading range. So basically most TPs occur in the London session. So you execute in the London session and you're done for the day. At times you execute, your TPs hit in the session and you're done for the day. So that's why I recommended this strategy to most of you. It is a very powerful strategy when it comes to that. So now we're going to be moving to a backtesting session which I did for September 2024. And please guys, watch the whole video so you get to understand the whole strategy. Some of you guys will come to me in my DM and say, yo, I didn't understand the strategy here and here, and I say, go, I will give you the timestamp, go to this minute and check, and you'll be back like, oh yes, I missed that. Yeah, I understand you can miss some things, but if you miss something, please just rewatch the video, then come to me. If you still do not understand, I'll be glad to assist you. My DM is open. I don't charge anything for assisting you guys. So now let's move to the backtesting session. What's going on, guys? Welcome to the backtesting session. So today we're going to backtest September 2024. So basically we're going to go to the next day. We just say go to next London session. You can clearly see this is Monday. Now let's see if we get a setup. Okay, let's increase the time to 5. Okay, now we're in the time range. So now we're waiting for price to sweep the low or form an FVG right there. And as you can clearly see, we have no FVG formed. We didn't get an FVG, so we go to the next London session. In this example, we're actually below, which is a good sign for buys. Now let's just see if we'll get the IFVG. This is a bullish FVG, not valid. We need a singular bearish IFVG. Okay, get some momentum there. And we didn't get the FVG right there. In price ended up pushing up. As you can see. Let's just see if price presents a setup before. Call it time. Let's wait and see. And we didn't get the setup. So we move to the next day. Let's see this day. If we get a sell setup, because the market purged the highs, there's a singular fair value gap right there, oh, and there's another singular FVG right here. I believe it was no longer. Oh, okay. We didn't get the close there. Let's see. Okay, that's a clean close, and I believe I'll enter this for a short position right there. We can use the 50% of this candle's range to get the entry. Let me just see if the target is close by. No, I'll just target 1 to 2 like this. It's not too big for me. And for those wondering which one is the fair value gap, let me just highlight the fair value gap for you, which was violated to form the IFVG, this one right here. As you can clearly see, we closed below and we're in the time range. So now we play price, moving in profit a little bit. If you want, you can say when price hits 1.5 hour, you move your SL to break even, or you halve the stop loss. Forgot to execute this trade. Sorry guys. And this would be a take profit. I won't make that mistake in the second time we get a trade. So this is a TP, right? It's a clear TP, and unfortunately with this software we cannot go back in time to re-enter. So this was a winning trade. Let's just say we missed it, because you miss some trades in certain days. If I had entered halfway here, half of this candle, which is somewhere around here, we would have got TP earlier, like right around here. But anyways, we still got TP right there. Our TP still got hit before price reversed. So now let's continue playing price. Since we swept both sides, we have nothing to look for in this day, so we move to the next day. And in this example, we have a potential bullish setup. Let's just see what we get from the markets in the session. Okay, the market is just pushing up. We want it to drop before pushing up, but I don't believe it's doing that. So we have no setup. Price swept the low and then swept the high of the range, so we have to move to the next trading day. Swept the high, so we're looking for sell setups. Okay, we have a fair value gap there. It wasn't inverted. We marked the whole fair value gap, including this gap right here, or volume imbalance, whatever you like to call it. So when they both get violated like that, that's when we'll execute. So we'll go in short right here. We execute a short position right there. Stop loss at the high, but this is really wide, I believe. Yes, it's too wide, so we'll have to execute off the 50% of this candle. So let me mark the 50% of that candle right there. Let's add the 50% to the fib and remove these other values. This was another strategy being tested. right there. That's where our entry is, the 50% of that candle, and we target a 1 to 2, just like that. And I'm not going to forget to place an order right there. It's a sell stop, right? Yes. And no, it's a sell limit, man. Yes, we're selling above market is a sell limit, and we click save right there. We just play price to see how it goes. And tagged in, and we get tagged out. Now we are in drawdown. But if we had won the first trade, we'll be up 1%. But we just say we missed it, remember? And what happened here? Did we get another setup presented? Yes, we got another setup presented right here. Did it actually invert it, or it just closed in the same range? The high of this candle is 11169, and the close of this candle, actually the open of this candle, is 11169. So I will not take the trade. I need price to actually invert these levels. You clearly see it then hit the SL. We need a body close below such that we can say it's a valid setup. Let's see if we get another trade idea, and we get one right there. It's actually a singular fair value gap that gets invalidated right there, and we execute a short position. Let me shift this one that side. It's actually clean. We execute a short position with the stop loss above the high, targeting a 1 to 2. If we take this loss, we'll move to the next day, we'll be done for the day. Or if it hits TP, we'll be up 1%. Let me move it to 2R. Just leave it like this, the same thing, and we place the order, sell by market, and save. We're now in the trade. Let's see how it goes. And we hit take profit. So now we move to the next day. Next London session. You can clearly see that the market has swept the low, meaning we're looking for buys. I really don't like this type of market structure. It's not that great. The fair value gap inverted here. No, that's not valid. So let's continue watching the markets to see if we get a setup. If this FVG is invalidated, I will not execute. Why? Because this is not a singular fair value gap. There's no swing point in this rally, and we end up failing to invert it. Let's see now. Okay, that's an inversion, but I really don't like how it's looking. With experience, you know which setups are higher probability and which are not. This one is not a high probability setup. It does work at times, but it's not a high probability setup because the market has been trending down, but we just have to execute since it's a back test of the strategy. So let's play. That's a very quick loss, as you can see, because the market has been trending down. If we get another loss, we'll be done for the day. If we take a W, we'll be up 2%. So let's see how the market, you can see this market structure is awful, man, but it did invert, right? And this is not a singular fair value gap. This candle's open is 632, and this candle's close is 633, so it's an inversion, but it's not that powerful as others. Let's just see. I don't really like these types of inversions, but for the backtesting session's sake, you have to execute. So let's see how it so we've executed. Let's just see how it goes. Straight to stop loss. So basically, when trades are moving like this, you can avoid them. With experience, you know which setups are better. You can see the previous setups and these setups, there's a huge difference between them. These are setups to avoid, and after taking 2 losses, we move to the next session. So let's see, price is trapped within, and we sweep the high. This is not a valid fair value gap. This is a series of continuous fair value gaps showing bullish momentum. So let's wait and see. Let's wait and see. You can clearly see if you entered short here, you would have been stopped out on this series of fair value gaps. There we go. We have a an inversion. No, there's not. Let's wait for the next candle. Yes, it inverts. Okay. So basically this candle's range is huge. We're supposed to enter there and just sell stop. That's a huge range, not gonna lie. That's a really huge range. So I'll most likely, this candle is small, this candle's range is huge, so I'll have to just use these candles 50% to reduce the range. Stop loss is above, yes. Let's mark these candles inversion, just like that. And why is this setup valid? Is because this candle or this candle formed the low here, making a swing low, then a fair value gap, meaning price then came and inverted this fair value gap, right? It was inverted, right? Let's check again. If it's not inverted, I will not execute. The high is 10426. This candle's open is 0426, so it's not yet valid. There's no clear inversion. Let's just leave it like that, and then it gets inverted. So where do we execute? We can execute here, but the stop loss would be quite wide, so execute right there above fair value, in the around the candle body's midpoint, a little bit above it, and we just add a stop order. Yes, a sell limit, and save. just like that. Let's just see how it goes. Quickly, we are triggered. Let's see how it goes. Okay, what time is it? If 5 a.m. reaches, I will break even. Don't like holding trades past that time. Let's see. You know what? Let's just leave it like that. See what will happen if we just hold to take profit or to stop loss. But in normal cases, I would break even this trade. So let me just break even. Don't really know the outcome. But when price is close to TP, there's no need to hold just like that. Oh, that's most likely a break even. Back. Yes, it was playing around. That's a break even trade. There's no need to hold it. Though if you had used the high of the fair value gap, your take profit would have been hit right there. So let's move to the next day. Next London session. Let's see how the market moves. This was not a valid fair value gap. Why? Because there were two fair value gaps continuously. So it's not valid. You can see how choppy it is when there's not a singular fair value gap. Price then takes liquidity and we get an inversion. Let's execute on this short position. Stop loss at the high. Target 1 to 2. Compared to the other strategy, I believe this one is more powerful. Though it does take losses as every strategy does. There's no strategy with a 100% strike rate. We actually aim for around 50% with these strategies. Most of them are around 50%. I don't like this choppiness. I would have broken even if price was somewhere around here because it's 5, but we just have to hold. I don't like holding outside these times. This is why you can see. Most likely in the New York Q zone, price will sweep this high and drop because we had a expansion in the Asian range. But let's just let it play out and take us out. Stop loss. So let's move to the next day. Let me just show you what I mean. You can see we're now in the New York Q zone and price dropped. Wow, because the Asian range had a huge expansion and the London range consolidated. You could have looked for a trade in this session, but it's not part of this strategy. So let's go to the next trading day and see what we have in store for us. Let's see if we have a fair value gap. Oh, it's before the session. Session is started. It's not valid. Okay, we have a fair value gap. It's a singular one. And we get an inversion right there. That's a nice one. You can clearly see it. The singular fair value gap inverted right there. Enter your short position, stop loss at the high, and you target 1 to 2. And you execute the position. Let's see how it goes. Straight to TP. We're back at break even. Let's just see if we can pass a challenge trading like this, or we can get 6% or 7%, somewhere around there, in just 1 month. So we are back at break even, and let's move to the next trading. Not yet. See if we swept below. We haven't. Okay, now we can move to the next session, because we would have missed an entry opportunity if you quickly move to the next session. Now let's see what this session has in store for us. It's really a nice London range, but usually in London range should provide a Judah swing, which is just like that, a sharp move to the opposite side of the range, just like that. But we do not have a singular fair value gap. That's a swing point there, which is nice. Let's see if we get more liquidity swept below so that we can get buys. It's a fair value gap inverted. We buy right there. Stop loss at the low. Some small breathing room, and we target 1 to 2. Like look at it at that high right there, and we execute right there, straight to TP. So let's move to the next trading day. And see what the market gives us. The market hasn't swept any side, meaning we can still trade, however, which side. But I do not really like this huge range expansion right here. So let's just see how the market does. That's not a valid fair value gap right there. So now let's see more price action. That's a nice fair value gap right there. Okay, we swept more liquidity. I do not think we'll get a trade set up on this day. Let's just wait and see. And we didn't get a trade set up, so we move to the next day. Okay, on this day, what's happening? We swept the low. Let's just watch price closely. We're waiting for the session. Okay, that's nice, that's nice, that's nice. Okay, we have a fair value gap here. inverted, we might execute it. Let's see. No inversion. Okay, there's an inversion right there. Buy here. Stop loss at the lows. Right there, and we target a 1, 2, 2 RR. This is a continuation setup. Let's see how it goes. Wow. Oh, it missed TP. TP is hit. So we're currently up 4%, but we do not care about the PNL. We just have to keep executing the trades to see where we get to. So now let's see if price drops before moving higher. Yes. Didn't provide us another setup. Okay, so now let's move to the next trading day. Okay, so we currently have a setup where we swept the lows and we are looking for price to move higher. Let's see if we get a setup in the session. Okay, that's a huge drop right there, which makes it less probability for me, and we do not have a singular fair value gap right there. So let's just wait and see. Price seems to be ranging a bit. Huge impulsive candle, but there's no inversion of a singular fair value gap. So basically what happened here is price just dropped for a London breakout, retested the low of the Asian range, and then continued dropping lower. So let's see. There's no setup. We could have got a setup here for an inversion, but there's nothing right there. Okay. It seems to be, yes, we inverted that fair value gap. It's still a singular fair value gap, right there, but we have a huge candle. So let's see if we mark the 50% of this candle, how much we get to somewhere there. Let's see if it's enough to give us a 1 to 2 before reaching the previous high. I don't think so. If we put our SL here, it would be worse. So we can put our SL around here and target a 1 to 2. But we have to be cautious with this entry mechanism. So we just have to play with our stop loss, close buy. Let's see. Oh, made an error. Let's close this. It's supposed to be a buy limit, not a market order. So we buy there and target there. Stop loss at this region. The stop loss is risky. If price tapped here, we wouldn't execute. Okay, we're in the fair value gap, but we don't execute. Okay, we just got filled. Let's see how it goes. Up towards the target. Now I would move the stop loss to break even. Right there. Okay, we got take profit hit. So now let's go to the next day. Okay, so we just swept the high. As you can see, this strategy can have winning streaks and losing streaks. So you just have to practice proper risk management and you'll be good. You can clearly see that we swept the highs, meaning we are looking for sell setups. So let's see what current market structure has in store for us. Okay, let's see if we invert that fair value gap. Price is trying by all means to invert it and not go higher, and then it goes higher. It failed from the flag and went up. So let's see if we invert. Okay, those are continuation fair value gaps, meaning they are not valid. This day we might not get a setup. Most likely no setup here because we have a continuation fair value gap there. Oh, we're back on the 1 minute. Okay, so now we need price to sweep liquidity before dropping such that we can get another entry. Did price sweep the high right there? If it swept the high, it should be a valid setup for me. If it didn't, it won't be. I don't think this is valid because price had formed multiple fair value gaps right here, and we got this fair value gap, inverted it and started dropping, and we have equal highs up there. So let me just leave it. I'd rather leave it even if it hits take profit. Clearly see it then got violated. When you're trading continuations, look for setups where there's no fair value gaps in your opposing range, and there is no setup in this day. Multiple continuation fair value gaps, no singular and no inversion. So let's move to the next day. Okay, we haven't swept any side. So we wait for liquidity raid of the 9 AM ranges liquidity. Okay, we swept that high, a lot of momentum, and we got those gaps. So let's see how the market presents itself for us. No fair value gap there. We need more bullish candles. Still no fair value gap, right? Nothing. Let's continue playing price to see if we get a fair value gap, which gets invalidated right there. Exactly. We get our singular fair value gap right there. Stop loss above the high, and we target 1 to 2. Just like that, and we execute with a market order. Let's just play and see how the trade goes. Either stop loss or to take profit. Straight to TP, meaning would have passed a prop firm challenge, a one phase prop firm challenge, the first phase, and will be on the second phase. This just comes to show you how powerful the strategy is. So let's move to the or we are not yet moving to the next day, would get another setup, and we move to the next day since we swept the today's low. Move to the next London session, and we'll see if price presents a nice setup for us. We did sweep the high right there, meaning we're looking for sell setups. And if we just invert this, I won't take the trade. See how it goes. Okay, now that's better. We wait for inversion. Wonderful. That's a nice inversion with a huge red candle. This one I would take it and target my 1, 2, 2. It's not that big to concern me. There we go, 2 hour, and we take the trade. Just let the market do its thing and see if take profit is hit, and take profit is hit for a 1 to 2. Let's continue playing now. Let's move to the next day since we swept the previous day's low. London session, and the simulation is over. Let's see the analytics of this back testing session so we know how powerful the strategy is. From win rate to total trades, break-even trades, everything, and profit and loss. You can clearly see we have a 66.67, but that first trade which we missed, if you remember, if we had taken it, we would be up 70% on the win rate with an account balance of 110,000 in just 1 month, guys. This is a powerful strategy, and it's simple, it's very mechanical, easy to execute. You can see the average RR is 1.76, max is 2.03, ideal average risk to reward is 8.34, makes ideal. But if we increase this, we'll get more losses. You understand? You can see we took more sales than buys, but that doesn't matter as long as you profit. And here you can clearly see the worst day and the best day. The best day for this strategy is Friday, followed by, which day is this? Tuesday, then Thursday, then Wednesday, and lastly Monday. I understand people who do not trade on Monday, but you'd still miss out on great opportunities if you don't trade on Monday. You can clearly see the P&L. We just had this losing streak, but if we did not break even here, we would have a 4-trade losing streak. If you are able to handle a 4-trade losing streak, I believe this strategy is for you, because we had a 4-trade losing streak right there, and then we had this 1, 2, 3, 4, 5, 6 trade winning streak. You understand? So this strategy is powerful. Imagine a 6-trade winning streak. There are strategies out there which offer it, but most people sell them to you for high amounts of money. So I believe this strategy is powerful, but this is just 1 month. And for you to trade this strategy to a better level, you have to add some discretion to it, filter it, remove some trades. On those 4 losing trades, you might just took 2 losing trades because of your strategy. But this strategy is powerful, as you can see, guys. Total trades taken 13, 8 wins, 4 losses, 66.67% win rate. That's 10% for a month, and it actually has negative months. So you have to backtest this strategy a lot and see if it suits you. If it suits you, this strategy is for you. I saw that the entry mechanism for this strategy is better than the CRT entry, since the CRT entry takes a lot of losses, guys. The CRT entry takes a lot of losses on the intraday range strategy, but on the Monday's range strategy, the CRT entry is powerful. It takes less losses and is very effective. With that, thank you guys for watching. I will see you in the next video, and please don't forget to comment, like, share and subscribe, and also join the free Telegram so that you can decide on which video you want me to upload next. Thank you for watching, guys. See you in the next one. What's up, guys? So I'm going to show you the indicator I've been using to mark my Asian range and to mark the London Q zone. So basically it is this indicator by Shanxia, code ICT session Q zone boxes and deviations. Let me show you the settings that I use. I actually turned off all other settings except here I left boxes and the colors. I turned off the V line and the horizontal line. Then I marked 2100 and 000 and 01 and 5. That's actually everything. So thank you for watching, guys.